Okay, we're looking at the last two requirements. In requirement 5, if you go and you look at the text, we need to look at the valuation of dividends and answer the question, should you invest in the common stock of XYZ Athletic Supply Incorporated, and fully explain your decision. So we will look at the dividend payout, which is the annual dividend per share divided by the earnings per share. So here are those numbers. Those were given to us in the financial summary. So we will complete the dividend payout. So we take the annual dividend per share and divide by the earnings per share, and we get our dollar amount. And it will be, correction, not dollar amount, it will be percentage amount. So 111%. So you will see that over time that this decreased. So let's look at our analysis here. We can say here that the dividends per share and earnings per share ratios are both increasing over time. These are probably the two most watched financial measures. So the stock is attractive. However, dividend payout is decreasing, which is unfavorable. So when we're looking at investing, we want to see the money. Show me the money. Will I get a return? What is the earnings per share? These three numbers, calculations here, are very important. We want to see the dividend per share increasing. We want to see earnings per share. And we want to see the dividend payout increasing because if we're a stockholder, we want to get paid for investing. So these are very important. Requirement 6. This is basically, if you look in your list of requirements, requirement 6 says, should you invest in the common stock of this company, and explain your decision. So what we could say here in our final analysis is XYZ's trend of net sales revenue, net income, inventory turnover, earnings per share, and times interest earned has improved. All other measures have held steady or improved. There are no apparent trouble spots in XYZ's data. Therefore, invest in XYZ for increasing dividends per share and steady growth. And that concludes requirement 5 and 6.